Another day without resolution to the US fiscal cliff keeps investors on the defensive and European equities in the red. And a landslide election victory for Japan's conservative LDP pushes the yen to its lowest against the dollar in almost 2 years. So that's how markets have kicked off the last full week of trading this year. Now let's look ahead to Tuesday. The Bank of England will publish its latest quarterly bulletin ahead of minutes from the last policy decision and UK final third quarter GDP later this week. The central bank left rates and QE unchanged earlier this month, despite warnings from Chancellor George Osborne that growth will be slower than expected. S&P last week put the UK on negative outlook, meaning there's a 1 in 3 chance now it'll lose its AAA rating within the next 2 years. Sweden's central bank expected to cut rates tomorrow by 25 basis points to 1% to shore up its slowing economy. Household debt is the 4th highest in Europe, and falling export demand has hit growth. The Riksbank has cut rates twice this year, and the latest Reuters poll suggests it may cut again in February. Spanish Economy Minister Luis de Guindos will appear in Congress to explain details of his country's banking bailout. Madrid has asked for 37 billion euros to prop up its financial sector. The biggest chunk, more than 17 billion, will go to Bankia, which holds 10% of Spanish savings deposits. In corporate news, UBS expected to be hit with a $1 billion plus fine to settle charges over LIBOR rate rigging. That's according to Reuters sources. The ruling, which could come tomorrow, would be more than double the $450 million levied on Barclays in June. So maybe a line in the sand for UBS, but not so the LIBOR saga in general, says CMC Markets' Michael Hewson.
I think policymakers need to step back from bashing banks and actually start to encourage them to lend. So for UBS, probably a line in the sand, but I would imagine that there's probably going to be a few more shoes to drop with respect to fines from regulators for indiscretions over the last 10 years.
Tuesday marks the deadline to take over online gambling group Sportingbet. William Hill and GVC lowered their bid to £485 million at the end of November after shares in Sportingbet collapsed nearly 50% on disappointing Q1 results. That is it for now. I'm Axel Threlfall. This is Reuters.